Oil prices resuming their dramatic downward trajectory. Crude's fallen back, Ingrid, below the $30 handle in the latest session.
Yeah, shocker session. WTI down 5.5% to US $29.88 a barrel, while Brent crude dropped 4.4% to $32.72.
All this coming on amid rising supply concerns, hopes of a deal between OPEC and Russia on output cuts fading. I just saw some price action, though, on your screen, which did say 23.72 for North Sea Brent. It should be 32.72, I do believe, but still, we'll check on that one. Analysts say stockpiles are still on the rise, some speculating global storage could be close to capacity.
It comes amid forecasts for unusually mild weather across the US, which is hampering demand expectations. And for more on that and the commodities complex in general, Peter McGuire from xm.com/AU joins us in the business centre now. Peter, good morning to you.
Good morning, Ingrid. Good morning, Carson.
Shocker for crude overnight.
It's been a long night. You know, it's from around about midnight onwards, and you saw that market down 5.5% for WTI. That's just a big washout. You know, there's so much conjecture at the moment. The Goldmans remain bearish. The talks of that roadshow by the Venezuelan oil minister to do across Russia and, of course, the Middle East, to try and gain support and to glue this thing together. The wheels seem to have fallen off, and at the present time, it's one-way traffic again, and we're on that downward spiral.
When was Russia ever to be trusted, though? This is the bizarre thing. It seems that for 5 minutes, everyone suspended normal rules of the game and said Russia would come to the table on this. Now they're reviewing it and realising, oh, no, the script never really changed at all.
Well, probably not, and I tend to agree with you, and one could put their mind back to, 20 years ago, and conspiracy theorists as far as, the US and Saudis really upsetting the oil cart and driving prices low. I'm not suggesting we're on the same roadmap this time, but you need to also spread your mind across to Iran, where it wants sanctions have been lifted in Europe in January, and they want to see return of their 4 million barrels a day. Everyone's crying poor, and they all want to see a stronger balance sheet.
All these big players with all different motives, and they're meant to come to an agreement on supply. This
is the issue. You've got OPEC and non-OPEC members, Ingrid, and that's the challenge ahead for them all. And then you've got the cheaper producers, in the sense what they retrieve at, the $2 and $3 and $4 a barrel, all the way through to the high-cost producers. But I think the great dilemma is, and Goldman made a sense of that, if you see a return to higher oil prices, then that's going to really lift US production numbers as well. So again, you're going to see an increase in production.
So where's the happy medium?
Well, I think I can't see oil prices going back around $60 a barrel. I think it's going to be a long time till we see that number again. At the present, because of the war as far as production and who's in charge of that. Iraq's at really record numbers, and Iran wants to resume.
Because a lot of non-OPEC nations, for instance, you talked about OPEC and non-OPEC, they've still got their budgets pegged at around $60 a barrel.
You bet.
So when are you going to see a proper revision to that?
Well,
it's just
I think if you didn't have the US shale side of things, I think that you probably have oil back at $75 to $80, $85 a barrel. But because of that increase in production, and now being an export nation, that's going to just it creates confusion to the market, which in turn causes any producer, and we've seen that across the whole commodity complex, too much supply.
So it's one thing to say, OK, it's not going back to 60 or 70 US dollars a barrel, but what about the downside for oil? Is there much more from here?
You wouldn't have thought, but maybe we're going to test those $26, $27 numbers, Ingrid. It's a hard one to tell. This time last week, it was up 20% in a matter of about a week and a half. Huge, everyone's saying, is it a bull market? The hedge funds trimmed their short positions by about 7 or 8%. And now you've just seen, I think everyone was, there was a good news story, and that was, is Russia and Venezuela going to glue this together and we're going to see those higher numbers? Well, it hasn't happened, and that's where you've seen that sell-off.
What about this rotation of shorts out of Brent into WTI? Explain that, because there's actually been an increase in the latter,
yes,
whilst there have been falls in the former.
Absolutely. Well, you saw that price divergence, certainly from $29.88 or $29.90 all the way through to $32 for Brent. So that's WT versus Brent. So there's certainly far more push to the downside as far as that WTI market. Also, the other side, you made a note of that earlier in the ad break, as far as the warmer weather in the northern hemisphere and certainly in the US. So less consumption, less drawdown as far as heating oils, and that's also playing into the market as well.
So Fed, let's talk this, because often when you get lower oil prices, we talk about it all the time, theoretically it means better economy, more GDP, adding to GDP. We're not seeing that flow through at this point. What does it mean for the Fed hikes going forward?
I don't know. I think, well, when you think first off Japan, Secondly, you've seen gold rally at 3-month highs. There's many market analysts out there saying you could see 1150 or higher. I think the chance of having a March takeoff for another rate rise by Yellen would be very, very distant.
Then again, you've got near full employment in the US.
Yeah, so, but you've also got global concerns, and I think that there's just. I think that they'll sit on their hands this time round, be a little bit like our RBA. But I'm not going to go out there on a limb and say, right, it's not going to happen. But I would suggest that there's less of a chance of it happening than it does happen.
Let's talk softs, if we can. Is there sort of some upside on that part of the market ledger when it comes to a commodity trade that you can actually
make a dollar out of?
I mean, the Indian connection, for instance. What are we seeing?
Certainly.
there?
Well, you know, when you're thinking about 1.3 billion people, and you've got cereals play a large part as far as their daily consumption between rice and cereals. There is issues there as far as production coming out of that wheat belt through India itself. Okay. You've had unfavourable weather back-to-back seasons, which in turn creates a real dilemma for any farmer. And that's just, again, you play that Mother Nature hand. So at the present time, you're looking at there could be some price stability there. You could see, as far as an increase, if you do see better weather conditions, and in turn, the consumption's not going away, and it just seems to be a little bit all over the place at the moment.
All right.
It's a hard market to pick.
Yeah, it is indeed.
That's why we get you in.
Peter McGuire, we'll leave it there with you for the moment.
Cheers,
Thanks
Ingrid.
for joining us from xm.com/au there.